Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. We've got another of our interviews with executives of junior mining companies. Today we have Andrew Pollard from Blackrock Silver. Thanks for joining us, Andrew.
Great to be back here.
What I want to start with, Andrew, is I believe that we are in a place where investors that want to protect their money will find a good home in gold and silver to protect against the inflation and the banking crisis. Those that want to see their money grow are best to look at the gold and silver stocks. And
Right.
I think we're in a rising tide lifting all boats, and some companies will significantly outperform. And I really believe that you guys have the assets to be one of those companies. Let's start talking about this banking crisis and how that can be a catalyst for gold and silver.
Well, I mean, it's two-pronged, as you said. I mean, you've got the most aggressive Fed policy in the last 40 years, which we're now looking like we're coming at the very tail end of that. So that was the first sort of inflection point I think we have here. I mean, that's the perfect storm for metals, is the Fed finally taking their foot off the gas pedal and just showing that maybe, things are starting to break beyond a point that they're, really happy with. But the second big thing, which I don't think any of us were really expecting, but it's perfect for gold and silver investors, is there's question marks around the banking crisis now. People aren't sure, if the money they put in the bank, they'll actually be able to take out one of these days. So if you're not certain about your deposits, well, where else are you going to store your money? Gold and silver look like a pretty good place there. It's liquid, you can touch it, you can hide it, and it's going back 5,000 years in terms of a trading currency there. So we've got the Fed laying off now. It looks like that last Fed meeting, I think, represented the turning point. You're seeing gold and silver starting to run here, but the banking crisis, I mean, that might be something we look back in a few years and say, what other sign did you need to start to go bigger? I mean, you haven't really seen valuations in juniors rise all that much over the last year, despite the rise in gold and silver. I mean, high grade silver ounces in the ground this year, this time last year, we're trading for about $253. Now at with silver back up to a decent level, those same ounces are trading for $1.20 an ounce, maybe, if that. So that just shows you that money. There's a lot of money on the sidelines right now that's just had a bit of trepidation, just wondering what the Fed's going to do. I think people are now, everyone's future facing. The outlook's a whole heck of a lot brighter in terms of short term and medium term potential for metals. So I think this might be that beginning of the turn, and when that turn happens, it happens quickly. I mean, that's what happened. Things happen quicker now than they did 40, 50 years ago. If you go back to, the last real big shakeout was in March of 2020, where everyone's valuations, got cut in half just, between, say, February and mid-March of 2020. We went from 20 cents at the beginning of March of 2020 down to 7 cents by around March 15th. By June, we were 40 cents. And then, then with some good drill results, we hit $1.60 soon after. So volatility is something I'm used to. Something I'm looking forward to, and we haven't had that in the last year or two, is a market where good results are rewarded. Because in the last year or so, you might get one-day spikes, but then everyone uses those as liquidity events, and that's not the sign of a good market. That's a sign of a market that's scared about the future. People are clipping pennies and then taking their money and then putting it back in and clipping pennies. If this is really the turn, people aren't doing that. They see that being the bottom, and then they'll ride it, and then more money comes in. Then you get the FOMO. So I'm thinking, that with Fed policy the way it is, with the dovish bias that Powell had in his presser yesterday, with the banking crisis, and with gold and silver finally doing what they're supposed to be doing here, we might have that rising tide you mentioned, and it'll be sustained this time. It won't be sell the news. So that's what I'm hoping for, because we got a heck of a lot of news in the short term, which I'm hoping won't be a liquidity event. It'll be a value creation event where you can start riding up again.
So I think that that's one important catalyst for people to pay attention to when they look at something like Blackrock Silver. But the most important catalyst is coming from your projects.
right?
Why don't we start with Tonopah? At Tonopah, you guys have a 54 million ounce resource of silver.
40, it's roughly 45, 40, 43, 3 million tons at 446 block diluted grades,
With
and it's
very
about
high,
a 100-to-1 silver gold ratio. So it's about, say, of our block diluted grade, it's about 208 grams per ton silver and 2.3 grams gold, something like that. But it's just gold and silver, nothing else.
and what makes that special, and I don't think a lot of people really realize this, is that that's very similar to Silvercrest's first maiden
Right,
resource at Las Chispas. Now, fast forward from that maiden resource, now they've got one of the best new mines that I can find out there. Very low cost,
right.
high grade, money making machine. And I truly believe that you guys have that same kind of future ahead of you. So let's talk about what you're doing to expand that resource.
Right, right. Well, it's two pronged. I mean, we had a very successful campaign there last year in the sense that our resource only covered the two deposit areas on our project where the old timers were either mining or preparing to mine, and then never got around to actually pulling out the ore because metals prices tanked in the late 1920s, sent the company that was operating the project at that time into receivership, and no one had ever been back drilling that project ever since until we got our hands on it 3 years ago. So for our first, initial year and a half of drilling, we just drilled out the two areas that the old timers were preparing to mine and never got around to actually pulling out the ore. Since then, last year we stepped out 1.6 kilometers beyond where the resource left off, and it's on the other side of this large fault system that cut off our resource. So what made our drilling last year successful is we found the vein system offset on the other side of that fault, and it keeps going. So this is a very famous silver district. It's one of the most famous silver camps in North America for the grade, for the metallurgy. It was the center of the mining universe in the early 1900s in America, and it keeps going. So, the first year and a half drilling, yeah, we showed the old timers left about 43, 44 million ounces behind just in the two areas they were doing development on. And now we've stepped out and we've got this new the vein system on the other side of the fault, and it keeps running up, and it starts going north northwest up towards our lithium deposit. Now, another thing we're doing is we actually did some drilling internal to our resource area last year, which is really given us some new clarity on what's happening. Our DPB area, for example, I told you we've got two deposits that we laid out in our maiden resource. One's Victor. That came in, right as we expected. In fact, it was a little bigger. That's a nice thick vein system, and we fall right to the edge of our property. Very, very high grade, very thick veins. Our DPB vein system is a series of different veins which run parallel to each other. What we thought at the time of our original resource was that all of the veins were really east-west trending. What we know now with some of the drilling that we've done, we filled in some gaps on some of our veins that we just couldn't make it into the resource in that area. We drilled them out. We knew there was mineralization the entire way around, but we couldn't make them line up. We couldn't make it fit within a stope, so it didn't make it in the resource. Well, it's some drilling that we did last year filled in some gaps, and it shows that the veins at the bottom, our Merton vein, for example, isn't truly east-west. It really starts curving up to the northwest very, very strongly along the western edge of our resource area, and it likely cuts up to the north. Well, if that's the case, that not only does that bring a huge vein online within an area that's already been drilled out, but it actually shows that that vein might actually be related to that step out drill hole that we connected on the other side of the fault there, and it keeps going. So what we're doing right now is we're remodeling internally all the data we have, knowing that this vein actually starts curving up significantly. We think a little bit of drilling on there will go a long way in terms of bringing that system internal to the resource area, that vein back in there. So that would represent a whole lot of new tons. In addition, we now got the step out structure to the northwest, which we've laid into multiple times now. Our last set of drill results there, we hit something like 4.5 meters on the other side of the fault with grades up to 800 grams. So, we've got the extension and it's wide open, and we've pieced together, we filled in, the more data you have, the less assumptions you make and the more confidence you have in the model. Well, guess what? We've never had more data. And we're piecing things together that we always knew were there, but we couldn't really make heads or tails of it until now. So we see huge potential, not only internal to the resource, just bringing on some new tons there that were excluded, but also drilling out these new step outs. And if it's all related, like we think it is, our highest grade intercept ever at the project, we drilled in October of last year. It was 6.5 kilos, over 30 a silver equivalent, over 37 grams gold. And that was at the southern edge of our DPB resource. We actually think that's related to the step out that we've got right at the northwestern step out too. And if that's the case, that's a huge potential new old discovery, which we've just made, and we'll know. So it'll take a while for us to model everything, get that put together, but we're planning on a really impactful drill program there, starting some point over the summer, where we can just fill in a couple dots and keep just laying into that new structure there. But that has the potential to bring on a lot of tons very quickly.
You brought up a few important points there that I also don't think the market really understands, and that when you talk about your resource, there's different kind of resource calculations out there. Some are serious arm waving in inferred category, but you guys actually had discipline in your to up the quality of that resource.
Right.
I think that's important to point out, because these are controlled resources. They're not waving your arm resources.
This is as constrained as you'd possibly ever go on something like this. We did this resource this way to appeal to the corporates, and they can look at it and have confidence that there's no gristle in this. All the fat has been constrained. I mean, we presented in block diluted grades. That cuts your average grade down probably by 30 to 35% just there, because you don't mine blocks, you mine veins. So we factored in that dilution right up front. We stope optimized it, which is something you don't see many juniors doing, meaning all of our resource that we put out is fit within mineable, it's based on a mine plan. It fits within mineable shapes. Anything that doesn't fit within a mineable shape, using very rigid constraints, like 1.5 meters minimum vein thickness, for example. We didn't use any exotic mining methods. I mean, you'll see companies out there touting these experimental mining methods, which never really work in practice, where they're saying, oh, we can model down to 6 inches or down to 1 meter. Well, the smallest mining equipment you can buy is about 1.4 meters thick. So, that's why you use 1.5 meters, because, maybe you can make money mining some smaller things. I mean, I see people trying to use Rasu mining. Silvercrest even used Rasu mining in their initial mine planning, where they were able to go down to a 0.5 meter thickness. But as they started production, they said, hold on, we tried it. It doesn't work. It's too expensive and it's very dangerous. So they immediately cut like 20% of their ounces from their original resources off as they started mining, because it wasn't viable. Well, we didn't put any of that gristle in to begin with. So, maybe if there are new mining methods that come which allow you to mine, veins, pinch and swell, right? If you can go in and mine more narrower veins using a different mining method, well, that's upside there, but we're not going to bank on that, so we didn't put it in. So, it's our mining methods. It's about 82% long hole stoping and 18% cut and fill. Those are two tried and trusted, mining methods. And we use real mining costs there too. So, it's a very constrained resource. It's also, these things start small and they get bigger. Just like Silvercrest, they started with 3.4 million tons. They didn't factor in metallurgical recoveries. We did. So you factor in 10, say 90%, that brings their average, their tonnage right down to exactly where we are. They presented in undiluted grades. We presented in block diluted. So it's the same resource. Now we see potential not only internal to that, which I told you, bringing on new tons, which we've already drilled out, which we just couldn't figure out before. So there's that. There's potential to drill out the high grade structures, which we've chatted about before too, internal to the resource, which should see the average grade go up as you increase the drill density on the high grade shoots. And then we've got the extension of the district on the other side of the fault system that looks like it keeps running. So
That, understanding that resource area is really important as well, because you can add a lot of ounces in that area, especially when you can start focusing in on the highest grade area.
right, for
And
sure, right.
Victor, I don't know if you remember when we first did an interview, I talked about how excited I was about Victor. And it's truly been quite a spectacular part of that whole system for you guys, right?
Victor's getting bigger too. I mean, we've already, since the resource, we've hit Victor down dip multiple times. So it's growing. Like the plumbing there goes deep.
And
The
if
only
my
challenge,
memory serves me correctly, it was pretty wide.
yeah. I mean, our original discovery hole there was about 29 meters of a kilogram per ton silver equivalent. And we hit two other veins that the old timers didn't know were there on top. I mean, in that same discovery hole, we hit, I think, 1.5 meters of 3.6 kilos on a separate vein that was stacked on top of it. So yeah, and Victor
And I
runs, it
don't,
runs.
I don't think a lot of people really realize that about epithermal vein clusters. I live in Zacatecas, Mexico, and there's tons of epithermal vein mines here. One in particular was called the Milagros mine, and they mined two veins, and then they cut a portal across. They found a blind vein in there that in today's dollar values would be running at like $300,000 a ton.
Right,
That's the thing that a lot of people, these vein systems, they come up in multiples, and a lot of them aren't, they're blind. And
right.
so you guys have that wide open potential to find blind veins that are extremely rich.
Yeah, we've hit a lot of new veins in our drilling. You know, we started off with a roadmap that the old timers left for us, and that roadmap was just the historic workings. We knew where they were mining, we knew where they drifted across and were preparing to mine, but never got around to it. So we knew where some of the initial veins should be. There was no drilling. When we started it, there was 0 drill holes in our database. So in a year and a half's worth of drilling, we took it from discovery hole to maiden resource, and now we're proving upside, clear upside potential from that. But yeah, you piece these things together. I mean, they're not right at surface. They're blind and buried under hundreds of meters. But the more data you have, the more iterative the model becomes. And at this point, it's in some areas it's predictive, in other areas it's becoming predictive because we're piecing things together
You
now.
look
And
at you look at Mag Silver, and Mag Silver, those two veins that have Valdecanis and Juanicipio were blind veins. They found them, and now they are
right,
cash making machines.
right.
And so, not only do you have that potential in the resource area that looks like you're getting a better handle and could accidentally find some blind stuff, but now you've got that zone on the other side of the fault, and
Right.
got a runway to grow that resource dramatically.
Yeah, and it's following the geologic interpretation we always had. Tonopah, the high grade silver is right on the outer edge of this caldera, this blow off volcano top. So we always surmised that things would start cutting up to the northwest as the caldera margin or the coffee cup rim sort of starts curving up that way too. But it happened very, very quickly, and so we weren't able to piece that together back then. But it's following exactly as we predicted. And the best part is, as that caldera goes up towards the north, well, we own all that land. That's our Tonopah North property. So we're still trying to figure out where that caldera margin is, and you need to drill into it to sort of get a look at the stratigraphy, the geology of it. But we're following that vein system all the way up there, and we own the extension. So that's all. We're in a good position.
Well, I'm even more confident now when I say that I think you guys have a Las Chispas type mine on your hands of the future, and I think a bigger company will be the one who mines it.
Yeah, well, and the best part is we're on private land in Nevada, walking distance to a town. We don't have to build power lines or man camps, or and it's easy getting crews to want to work there. It's our Victor deposit's right behind Burger King, right? So it's about as good as it possibly gets from a permitting standpoint, from a cost standpoint, in terms of not having to build or permit things. This is a project that should be advanced very quickly. When that time comes, and I think now that the silver companies, no one was really making any money at $20-$21 silver, but if it stays 24, 25 for a sustained period, then I think you'll start to see M&A come into the sector, which has been sorely lacking from the silver industry. And that's when you'll see the valuation start to creep up very quickly. And I think we've got one of the most quality new discoveries or resource discoveries in the industry right
Actually,
now.
you got another project. I've always been proud of, and I say thank you to the mentors that I've had in geology, geophysics, and geochemistry, that I've been able to sort of be able to find projects sometimes off of one drill hole. And you've got that at Silver Cloud, that I don't think the market really understands what you have there. It's an epithermal vein. The first milestone you need in an epithermal vein is to hit the boiling zone. You guys drilled one hole into that Northwest Canyon target and hit 70 grams of gold and 600 grams of silver.
Yeah.
That is the boiling zone of an epithermal vein, my friends.
Yeah, it's the boiling zone. Not only do you need to hit it, but you also need to know which way it's running, because if you hit a vein system and you only have one pierce point, it could go there, it could go there, it could go there. You could try and follow it up and you'll be drilling parallel to it and miss a lot. But what's really what is the sort of the aha moment there is we can tie that intercept together with an intercept that Bill Howell made when he had this project with Placer Dome 20 years ago. And we now know we've got multiple pierce points in it now. We know which way it's running. So we can go right back to that high grade hit, step out, and there's really no guesswork in terms of trying to lay into that structure on either side. And anytime you're drilling multi-ounce gold in veins like that, the ounces pile up quickly. I mean, we're right on trend of the Midas mine. And our system there looks a lot like the Midas system. We're in the same graben structure, just like Midas is, which is a big volcanic rock package. Midas, the veins run north-northwest. It's about a meter. Midas produced 3 million ounces at around 30 grams per ton head grade, all from veins about a meter to 2 meters thick. So we always knew the target, if it was going to be Midas style, it would be in the volcanics, which this was. It would be in a vein system that was maybe about a meter and a half thick, and it would be lining up north-northwest, pointing like a gun, like a rifle, right up to the Midas deposit. That's a hell of a deposit to have the extension to, if we're correct. So we think we can do a lot with a very little on this program. And we're going to go right back into the site of that last big headline intercept and hope to pull some really good numbers. And we think 70 grams good. That's the highest grade intercept we've had company-wide ever. But we know the grade potential there is even higher, because Hecla right now, who owns Midas, is drilling out up to 180 grams on a new discovery they've got just north of us there. So also in meter and a half thick veins. We'll know very quickly if this is the real deal or not, but it won't take much drilling to get the market excited with those grades. And the reason people don't follow this part of Nevada the same way they follow other epithermal districts like the Golden Triangle, for example, is that part of Nevada has been consolidated by all the biggest mining companies in the world. There's no juniors doing anything up there other than us. We've had 45 square kilometers there next to the two highest grade historic gold mines in Nevada, Hollister and Midas, both whose systems point directly at us. And we've now got a multi-ounce discovery, and looks like a massive system. I mean, Silver Cloud is named after one of the largest mercury mines in North America, which is right on our property there. Mercury is it's the mother of pathfinder elements for these epithermal districts, which we're on top of. So that's a good place to start. So we know we've got this massive epithermal district. It's vastly underexplored. Not anymore. Where we've got a structure, we're going to go back within a few weeks, we're just waiting for the ground to dry out now. So
As you were explaining that, it brought up a couple of really important points to me. Midas was a historical company maker, or at least company launcher for Franco-Nevada. That
yeah,
was their first royalty, I believe.
it was their first. Not only was it their first royalty, they changed their business model and got in the mine building business. And then they sold it to Newmont, and that mine was the reason why Newmont was profitable in the era of $200, $250 gold. That was their cash cow. That was their, their Fosterville. I mean, that was that was the biggest cash machine in the industry at that point in the early 2000s.
So then another thing you brought up, which made me, I did a little homework on Google Earth, and I noticed a big structure there, Northwest Canyon. Is your projected direction of the mineralization associated with that big fault there?
Yeah, there is some structural significance there, but the biggest, there's been a lot of attempts to try and follow up on that original discovery that Placer made in 2001. We drilled it. We thought it was running east-west at first because east-west is how Hollister runs next door. So we tried to line it up that way. We couldn't. Tech and Placer also tried to follow up on their discovery hole, thinking it was still north-northwest, but they drilled on either side of that vein, but they weren't able to hit it. So Bill, in all of his infinite wisdom, said, okay, well, we've drilled here, we've drilled here, we've drilled here. I'm just going to drill in the middle there. And we on what would have been probably the last drill hole we ever did at the project, because it clearly wasn't our flagship at the time. Well, we hit. And I don't know in 4 or 5 years what our biggest project's going to be, because we've got 3 of them and all of them are, quite exciting at this stage. But I'll tell you what, if this is the next Midas, yeah, that has the potential to be something pretty
You
spectacular.
know,
So
Andrew, I don't think you're off base there with that kind of speculation, because knowing what I know about the Fresnillo district where Mag Silver now has their big mine, you had a cluster of veins about 1,000 meters by 1,000 meters right in the town of Fresnillo that started production in the 1500s. Then Fresnillo PLC moved about 1,000 meters away and found the Saucita district.
right,
Then they followed the Saucita district, Mag Silver did, and they found the Juanicipio and Valdecanas veins. And all of those veins are in a cluster of about 3,000 meters, let's say
yeah,
3,000 meters by 3,000 meters. You guys could be on to something very serious at Silver Cloud, and you already tagged the boiling zone of an
right.
epithermal vein.
Well, you're right. Where there's one, there's generally many, right? So, but at least now we've got the mandate to go in and at least show some size potential on this one. And if we can hit grades, which the Northern Nevada Rift is known for, then yeah, we'll have a hell of a mandate to, or we'll have a big target on our back. I mean, Hecla owns the 2 projects right next door to us. There's 2 mills within walking distance of our project there, and then it's not like I told you it's only big companies, on the rift there with these large land positions. Well, Newcrest just did a huge option earn-in with a small company called Headwater, drilling Midas North. So they've got the northern extension of Midas there, it looks like, where we'd be Midas South, the southern extension. But, as I said, you got Hecla, Newcrest. Right below us is the Carlin Trend, where it's the Nevada Gold Partnership. We're about 10 miles from the Gold Strike mine, which is the largest mine in North America. So this is prime real estate up there. There's lots going on. There's multiple mercury prospects all over a project, but we're honing in just on this one structure for this upcoming campaign. And if we're right, and if we can just keep putting one foot in front of the other there, that's gonna give our stock some real good luster in the short term.
It's interesting you bring up Headwater. I've been in the business since 1993. Can you believe it? I probably started when I was 5, right?
Yeah, I was gonna say 4 or 5. Yeah.
Actually, and during most of my career, Andrew, when juniors would do deals with majors, they always got abused. I have seen something that I have never seen in my career in the last 6 months or so. I'm seeing these majors starting to do junior friendly deals.
Yeah, yeah.
It's quite remarkable.
It was a big deal that Newcrest did. They obviously wanted in on the district. I think it's a minimum commitment of $30 million. They're in it for Headwater, something to that extent. Or no, it's a $30 million earn in, but that's, they've got zero drilling up there. That's very blind.
That's
I don't
30,
want to.
actually, that's 30 million to earn a option to make a 51 million,
Right.
51%. And then they got to spend, say they did it on all the projects.
Yeah.
They'd have to spend 35 million to earn the interest,
right.
the 51. Then I think they got to spend another 30 or more because they got to take it to pre-fees.
So what do you think? So they're going to be drilling Midas North. I know the Headwater guys well, in April as well. Now, no drilling's ever been there, but obviously Newcrest wanted in, and obviously their target's similar to our target at Silver Cloud. It looks like the same system. Now, what if Newcrest was willing to do a deal like that on a greenfield soil sample at best project? What do you think a company is going to be willing to pay for a discovery that's already been made, where you've already got a handle on which way things are running, where you've got multi-ounce gold? That's why we haven't done a deal on it yet. I don't want to sell this thing short. So, we're going to do a lot with a very little, and you can believe me that this is a program that's going to have a lot of eyes on it from a corporate level, just given the real estate we've got up there. But if you take a step back and look at our project portfolio as a whole, well, at Tonopah, we've got one of easily the highest grade undeveloped silver projects in the industry right now. We've got upside there. And then up at Silver Cloud, a multi-ounce gold discovery surrounded by the largest American silver company in the industry. And then, of course, we've got our lithium kicker to boot.
Hold on, before you leave, I'm going to give you 3 predictions on Silver Cloud that you're going to love these predictions. I think you're going to hit it out of the park on the one vein that you already have. Secondly, I think there's a very good chance that as you drill, you could find some blind veins.
Right.
Okay. The third, I think you're going to get a junior friendly deal done on this.
I think let's go 3 for 3. 3 for 3.
You've been very kind with your time, but I'd be remiss if we didn't touch on your lithium potential as well.
Yeah, we've got assays rushed. So there's, I don't know who thought it was a good idea to short a stock, which way we had a massive short position, which often happens when financings come off, or, so that they prey into weakness and all that. But, in just the last day or two, the Fed outlook's gotten a lot better. And our partner has told the market that they're rushing a whole bunch of initial holes from our project. They wouldn't be doing that unless they thought they'd move the needle. And, the thing about our lithium deposit is it's right directly adjacent to our silver project. So you've got the Tonopah lithium belt, which is emerging as the new Carlin trend of lithium deposits. You've got 2 of the biggest projects in North America as our next door neighbors, both of which are commanding, billion-dollar market caps at this point. And our partner is following up on our campaign last year. They're drilling out a 5-kilometer by 3-kilometer area. It's all at surface. You can walk up and touch it. Like it's not like a vein that you're trying to hit hundreds of meters and you better not miss. You're just taking the core rig and laying in there and getting the data. But a resource can be built on something like this very, very quickly. We've got assays in the lab, but I mean, we're right. American Battery Metals is a company. They're traded in the US. They just put out their maiden resource estimate. They're on the same belt as us. It's one of the largest in North America. They've got a $700 million US market cap. Right next door to us, right on trend of us is American Lithium, their TLC deposit. They've got a $5 billion NPV on their after tax, on their PEA they put out last month. It's one of the lowest cost operations in the world. It's spec'd out to be, with a 38% after-tax IRR. We've got the same grade profile that they do on early drilling. We're drilling out a similar size area, and we're right next door. We have the crossroads of what's becoming as one of the prominent lithium belts in the industry where it cuts across one of the most famous silver gold districts in North America. And we hold that whole place in the middle there. So
Andrew, can you tell us about the deal that you have with Tirlac on
yeah,
that project?
so they've got a 5-year option earn-in where they can earn up to 70% of the project by spending 15 million, 15 million US, and taking it to feasibility. Their initial earn-in to get 51%, they have to spend 5 million US in just the next 3 years. We did the deal with them in January. They had the drill on the project by the end of February. And they're drilling a big core program right now. As of their last news release, they had 6 holes done. It's quick drilling there, so I'd assume they've got 10 or 11 completed by now. They're rushing a bunch of those assays just because when you're sitting next to 2 multi-billion-dollar projects with NPVs like that, and you've got 20 square kilometers where they're drilling out 15 square kilometers here, and it looks like they're hitting, well, that's going to show some size potential to the market very, very quickly. And we might start getting a credit for that. So there's 3 ways to win with us. I mean, Tonopah, take away our other projects. Just look at our ounce in the ground valuation right now. We're undervalued. We've got, we've got a better handle on the model now. We've got clear potential to add new tons. We've got a step out on the district and it keeps running. So there's nothing but upside there. Silver Cloud, as you said, I mean, there's going to be lots of people watching this one. We're not having to reinvent the wheel. We know which way things are running. So we're just going to keep putting one foot in front of the other, and things can get very exciting there very quickly. And then the lithium side, I mean, yeah, I'd expect we might have news as soon as early next week. So when you rush assays, it's generally 2-week turnaround time, maybe a day or 2 on either end, but it's been about 2 weeks.
So I always like to look at the value proposition when I talk to guys, and you've done a wonderful job of sort of talking about the potential. What's your valuation currently, Andrew?
I think I'd have to check where we're trading today. Probably around 60 million Canadian.
Wow.
Yeah, it's insane. It's insane, but I'm not going to kick a gift horse in the mouth. I mean, listen, the volatility is never fun on the way down, but it's where you make your money. And I'm not telling people to follow me blindly in this. I've been putting my checkbook in front of everything I'm saying here. I put 75 grand into just this last financing that closed last week. I probably put another 300 grand into the market over the last little bit. The pendulum swings both ways, and we're right now at that undervalued point, right at this inflection point in the industry where the Fed is going to lay off the most aggressive policy in 40 years at a time where there's a banking questions about, and, I think money's going to not only come back in the sector, but we've got catalysts. And I think if money does truly come back sustained in the sector, the catalysts won't be liquidity events. They'll be company building events. And the only difference between now and this time last year is I have more shares. We're trading for, a third of what we were. We're backstopped by ounces now. We've got 2 new projects which look like big time potential discoveries. And the valuation here is crazy. So, I don't know why you'd sell here, but people are clearly trying to sow some distrust. I mean, we had a huge short position this week and people were playing games. I'll let the assays do the talking. You don't have to follow me. I'm already put everything I possibly, if I could get money for my dog, I probably would at this point, because I think, we're in a really, really good position and we're financed now.
Keep
If
the
we
dog.
weren't, there
Andrew,
could have been
keep the dog. The tide's about to go up.
that. Okay, she'll be happy to hear that.
Okay, I'm going to close it off, Andrew. I think you did a wonderful job of explaining the value proposition and the quality of your projects. Did you have anything you wanted to close on, or did you just do
No,
that?
I think the only reason people would invest in gold and silver stocks is if they have a firm outlook in the future in terms of what gold and silver is going to do. And then you want to have leverage to that. The reason you buy stocks is to get leverage. Well, we're tied to gold and silver, so we're already a levered call option on the price of silver, because right now they're trading for ounces in the ground, or trading for half of what they were this time last year. So we could do it, we could do nothing and we'd still be tied to that just based off of fundamentals. But we've got upside potential. We've got drill results in the lab. We've got we're following up on a multi-ounce gold and silver discovery. If your outlook is that this is the turning point for metals, I can't think of a stock that you're going to get more leverage with than us, short, medium, and long term.
Perfect, Andrew. Let me close it off with talk at the other end.
There you go.
So there you go, folks. I started by saying that I think that we're in a pretty unique opportunity. I think that investors that want to protect themselves against the inflation, the declining US dollar, the banking crisis, that you're best to put your money into gold and silver to protect it. If you want to make it grow, you want to look at the mining stocks. And as Andrew was saying, they're trading at very cheap valuations right now. But as the price of gold and silver goes up, you're going to see the quality stories in the gold and silver stocks go up as well. And I think Blackrock Silver is perfectly positioned to be one of those boats that go up during a rising tide. And in fact, I think it will be one that outperforms its peers because they're coming from such a low base. As always, my shows are for information purposes only. You got to talk to your financial advisors to assess the risk profile for you and do your homework. I'm a big believer in that homework because during my career in the sector, the people that made the most profitable decisions did their homework, had reasonable timelines to see the companies make success, and they understood logically what they were investing in. They didn't look at the emotions of the day-to-day trading or the swings in the market. They understood what they invest in. I think that advice is good for not just the mining sector, but every sector. On that note, have a great day and we'll talk to you soon.